What if you could trade with the speed of a major exchange like Binance, but never hand your coins over to anyone? No account freezes, no company is holding your money, just you, your wallet, and the market. That is the promise of Hyperliquid. And in just 2 years, it went from total obscurity to one of the biggest stories in all of crypto. Let me explain. Hyperliquid is a blockchain, but not a general purpose one like Ethereum. It was built from the ground up for one job: trading. Specifically, it is the home of on-chain perpetual futures. Now, perpetual futures, or perps, are contracts that let you bet on the price of an asset, like Bitcoin or Ethereum, without actually owning it. You can go long if you think the price goes up, or short if you think it goes down. And you can use leverage to amplify your bets. Perps are the most traded product in all of crypto, by far. The problem? Almost all of that trading happens on centralized exchanges, companies that hold your money for you. And we have all seen how that can end. When FTX collapsed in 2022, billions in customer funds vanished overnight. Hyperliquid flips that model. Everything happens on the blockchain, out in the open. The order book, the matching of buyers and sellers, even the liquidations, all of it is on-chain and verifiable in real time. You keep control of your funds the entire way. And here is what makes it special. Most decentralized exchanges use something called an automated market maker. It is clever, but it is slow and clunky for serious trading. Hyperliquid does something almost no one else could pull off. It runs a true order book, fully on-chain, that feels just as fast and smooth as the centralized apps traders already know. To do this, it uses its own custom-built engine called Hypercore, powered by a high-speed consensus system. Orders fill in a fraction of a second. On top of that trading engine sits HyperEVM. This is a layer that is compatible with Ethereum, which means developers can build their own apps, tokens, and financial tools right on Hyperliquid. So it is not just an exchange, it is becoming a whole financial platform. Powering all of this is the native token, called Hype. Hype is used to pay fees on the network, to stake and help secure the blockchain, and to vote on how the protocol evolves. But the most interesting part is the buyback. Almost all of the fees the platform earns from trading are used to buy Hype back off the market and burn it. The more people trade, the more tokens disappear. That ties the value of the token directly to how much the platform is actually being used. Now, here's the part that turned Hyperliquid into a legend. It was built by a tiny team, around 11 people, led by a former Wall Street quant named Jeff Yan. And they did something almost unheard of in crypto. They took zero venture capital money, none. Jeff funded the whole thing himself, using profits from his own trading firm. He reportedly even turned down a $1 billion valuation because he believed that letting big investors own a chunk early would corrupt the project from the start. Then, in November 2024, came the moment. Hyperliquid launched its token with one of the largest airdrops in crypto history. It gave 31% of the entire supply, around 310 million tokens, directly to the people who had actually used the platform. No insiders, no venture funds, no paid market makers, just users. Many of them woke up to life-changing amounts of money. That no insiders approach struck a nerve in a market exhausted by greedy launches, and it sent Hyperliquid into the stratosphere. Within about a year, Hype became one of the 10 largest cryptocurrencies in the world, worth well over $10 billion. Major firms even launched exchange-traded funds around it. So why does any of this matter? Hyperliquid is a glimpse of where crypto might be heading, a world where you get the speed and polish of a big exchange, but with the transparency and self-custody of true decentralization. You never have to simply trust that a company is holding your money safely because you can verify everything yourself. Jeff Yan has said his goal is for Hyperliquid to eventually house all of finance. That is a massive claim, and it is far from guaranteed. There are real risks. Competition is fierce, and trading carries danger, especially with leverage. But love it or doubt it, Hyperliquid has already proven something powerful. That a tiny team with no investors and no marketing machine can build something the entire industry is now racing to copy. Now I want to hear from you. Is Hyperliquid the future of trading, or is it riding the hype? Drop your take in the comments. And if this video taught you something, the best thank you is a quick subscribe. I upload new crypto breakdowns every day. See you in the next one.